Hey, what's going on YouTube? Millennial Trader here from the Millennial Trader YouTube channel. Welcome to December. Today is December 2nd, 2024, and XRP is flying high. How much further can it go? We'll take a look at the charts. I'll update you on a trade that I recently entered and exited. We'll take a look at the overall market, the fear and greed index, Bitcoin dominance, and then again, we'll review trading levels in Bitcoin and the relative strength of Bitcoin versus Ethereum and kind of give you my thoughts and analysis of where I think Bitcoin is going and some of the other indications that I'm looking forward to going into the rest of December. So, with that, we'll take a look at the Fear and Greed Index on coinmarketcap.com. So in my last video, I was mentioning that generally speaking, we are in an area of extreme greed. And as I mentioned previously, we don't typically stay within this shaded green area for an extended period of time. It's just not typical, and we end up coming back down and trading within this greed to neutral area. So at the moment, as you can see, we're trending down from the extreme greed levels up here at around 83, or sorry, 88. I think previous to this peak, we were at an extreme greed factor of 90 back in March of 2024. So not too long ago, but you know, relatively close in terms of time frame. I have the setting shown as all, just so that you can get a wider view of the overall market trend and direction. And as I was mentioning before, we generally end up staying somewhere in between the greed and the neutral area. And over the past couple of weeks, you can see that we're generally trending down lower. So there's still optimism in the market, which is good. It's still a bull market from the crypto point of view, and I'm still generally bullish on a directional basis. But again, I'm at the point where I'm kind of picking and choosing the levels that I want to tactically trade in, just for the sake of knowing that we may be potentially seeing some short-term exhaustion within Bitcoin itself, and I generally keep an eye on that to get a sense of the overall flavor of the market, and some of the other coins that are trading based on the overall optimism of Bitcoin and the market. So, right now we're still in an area of greed, but obviously we're slowly starting to come back somewhere into this neutral area. But you never really know what new information may come into the market, which may sway the index back into the dark green area, or if we start trending back into the lower green to yellow area of the index. So overall, still directionally bullish. Congrats to anyone that's been long in Bitcoin, and I'm still looking for tactical bounces wherever they may show up to continue to be long until I'm proven wrong otherwise. The next chart that I want to take a look at is the Bitcoin dominance, and again, it's a visual that I typically look at just to see the overall relative strength and market share of Bitcoin compared to Ethereum and all the other coins in the crypto universe. And what's interesting is that over the past month we were pretty much close to all-time highs in terms of euphoria in Bitcoin, overall sentiment, and the shift in sentiment from, I guess, a neutral posture to one of extreme bullishness. And, as we can see here, or the trend has been to come off the previous highs and come back down to around 55 to 54. Generally, we typically end up staying within a range of 50 to 60, 60 being the upper band of Bitcoin dominance. And then over time, we can see that clearly the other coins within the crypto universe are starting to show a little bit more dominance and a little bit more volume in terms of the trading and the dollar volume of activity within the crypto space. So, something I'm still keeping an eye on. There are some indications, as I previously mentioned, where Bitcoin may be on the cusp of underperforming some of the other coins. And, as I'll talk about in a little bit, we've been seeing XRP Ripple on a tear over the last week. And, I'll give you my thoughts and interpretations of why it was a good entry point to get into the market at a certain level. And I'll give you my thoughts again on just overall directionally where I think Bitcoin and Ripple may be heading to next. Okay, so here we have a chart of Bitcoin. Over the longest while, we were in a consolidation path from this level up until uh, late September, early October, where we were just in a channel essentially, just waiting for some kind of new information to impact and change the direction of the market. And obviously that was the U.S. elections, with President-elect Donald Trump being elected to take office in January. And, ever since then, we've just been on an extreme tear up. Uh, Again, looking at the sequential model from Tom DeMark, generally we're in an area where we're seeing +9 and +13 exhaustion signals, which generally speaking means it's a higher risk area to be putting on new exposure, uh, just given that 9 and 13 exhaustion signals to the upside indicate that you're at a higher risk or potential for either consolidation or a potential turning point in the market to the in the opposite direction. So, we're still kind of trending within the area of all-time highs, but as you can see, we are starting to get some selling, not much, because any selling that happens is being periodically bought up by dip buyers and potentially large institutions or other large entities who may have made press releases in the past just saying that they've been acquiring and accumulating at these levels. Um, so, it's something that I'm watching to see whether or not Bitcoin ultimately gives up this relative strength. And, we're still within an uptrend, and there's a potential bull flag being formed. But, after such a large move up, it's not unreasonable to think that we may be in a consolidation pattern for some time, similar to how we were back here in earlier this year with Bitcoin's $30,000 move up higher. So, if I put on something like that, we could potentially be in and around here for some time, potentially lasting up until the inauguration of Donald Trump, where that's where we might see the ultimate leg higher to this upside target of 107,425. That's a long-standing target that has been in place since about early August. And so propulsion is basically another indicator by Tom DeMark, which measures the thrust of the market um, in a particular direction as a potential exhaustion level or area where consolidation may end up happening. Again, it's something that I'm watching and I'm paying attention to. I don't necessarily want to be putting on new exposure, as I keep mentioning. The risk reward to me, it's not favorable. You're again, because of my understanding of the model and um, how good it is at potentially picking out exhaustion levels. For me, the risk reward, it doesn't make sense. I would rather, should we get another opportunity and Bitcoin comes down, to come, I would be more than willing to buy in and around this 86,475 level. It's a propulsion bearish momentum level where in a bullish market, should we come down to test this particular area and it holds, that is an area of support, an invisible area of support that you don't generally see on any other indicator. But this model shows that that is an area where potential bull buyers will be standing at the ready to potentially to continue to bid the crypto coin up further. So I'm watching. Uh, it's I guess it's a little bit too early to tell whether or not we will in fact hit this level, but I'm not necessarily buying Bitcoin at 36,000 and change. Again, what I ultimately like about the DeMark indicators is that it's forward thinking. It shows you well before some of these other technical analysis indicators like RSI or stochastics, that there are potential movements in the market that you want to pay attention to. And in this case, this signal right here was the signal for you to go long and ultimately enjoy this price appreciation up to the $96,000 level. So that's a $30,000 gain. Congrats to anybody who bought within this channel because you were ultimately directionally correct. And the fact that the countdown phase was still in process of continuation to 13, and it hadn't come back down to this um, lowest true low of this move to cancel the count out. That again, you still had the bullish lean to want to continue to buy for continuation to the upside. So I'm still directionally bullish in Bitcoin, but I'm not necessarily willing to put on new exposure at this current point in time. And in the next chart, you'll see why. So this is a chart of Bitcoin relative to Ethereum. And again, as I continue to say in my videos, Bitcoin has been relatively stronger than Ethereum since about mid-June. And, we had weeks upon weeks where the close was higher than the close from 4 bars prior, which is a function of how the sequential indicator has its timing mechanism. So once you create 9 consecutive high bars where the close is higher than the four bars prior, then at that point do you then start a secondary count called the sell countdown, where it's entitled to its own count of 13 bars where the close is higher than the low from 2 bars prior, and that is a that the completion of that secondary count will ultimately result in a potential consolidation phase or a potential turning point in the market, historically speaking. As we can see back here, when this count ultimately completed to a 13, we had a few weeks of um, price continuation, but in a sense, it was just contained within this area ultimately before we see a significant drop down, before the next leg higher, um, continuation to the upside to where we currently are now, where Bitcoin is trading within its all-time high range, and it hasn't been able to exceed it, but nor has it been able to come back down yet. So it's really just in a phase of consolidation, and again, I suspect as the next few weeks go by, we'll see directionally where, in fact, Bitcoin is heading in the short term. But in this particular case, we can see that the relative strength of Bitcoin versus Ethereum has actually reversed, where now Ethereum's relative uh, momentum is actually starting to increase and exceed Bitcoin's overall percentage gains. So yes, we're ultimately near towards a 13 count, which may ultimately complete, so long as the 13 ends up being higher than the 8 count here, the count will complete. But again, the 13 needs to be higher than the low 2 bars prior, and you won't get that until so if this is the current week, 1, 2, you probably won't get that until about another 2 to 3 weeks before the count completes, which satisfies the condition of the close being higher than the low 2 bars prior, and ultimately being higher than bar 8's count. So 2 to 3 weeks potentially is when I could reasonably say that Bitcoin may be at a relative top compared to Ethereum. And at this point in time, again, risk reward for me when I'm looking at which crypto coin, which crypto asset is potentially going to outperform on a relative basis Bitcoin, I'm probably starting to lean into purchasing Ethereum now. And for all of you Ethereum bulls, you're probably watching similar indicators or similar price bars or comparisons to give you your signal as to whether or not you want to start being a dip buyer in Ethereum. So for me, I would rather be buying Ethereum just for the potential price outperformance relative to Bitcoin. And from a risk reward standpoint, again, I don't necessarily want to be buying Bitcoin up here. I would rather wait for a much more bigger pullback of about $10,000 to that 86,000 price level before I'm willing to consider at least dipping my toes back into Bitcoin. All right, so let's move on to the third coin, the talk of the week, the talk of the day, and that's Ripple. I mean, Ripple just has been on an explosion over the past 4 weeks. Look at where it started on earlier this last month on the week of November 4th. We were trading sub 50 cents. Okay, and at that point in time, and again, I want to continue to harp on just how effective the sequential model is at picking up turning points in the market, because trust me when I tell you, the institutions are using this model. They're using it to their advantage because of how effective it is at determining turning points in the market. A model that was developed back in the 1970s, and since then has only been slightly tweaked in terms of making improvements to it. Obviously, with computers, being able to see things in real time, on any time frame is in fact one of the marvels that of just how good the DeMark sequential indicator is at demonstrating to you in real time when to start buying and entering into longs or selling and potentially shorting into positions that have been on a tear. So I'm just gonna. Oops, sorry. So we had months and months and months, actually years, where Ripple was just trading range bound. You couldn't get any traction, and realistically, this was a phase of consolidation. And you know what? You may have heard those technical analysis, um, that technical analysis jargon, where the longer the base, the higher the space. Well, look, that actually came true, because for over 2 years, it was just consolidating and trading range bound between 30 and 50 cents. And then ultimately at the beginning of November, without having to look at any fundamental news, we can see that the 13 ultimately completed, and that was the signal to once again start looking to go long. And had you acted upon that, and either you started to slowly scale in, you would have been rewarded handsomely. And that is an outstanding return. If I'm looking at just the share price appreciation, like, just look at that. You've gone up almost 600% in a month. So if you got in Ripple at 50 cents, congratulations, because you made some serious money, and congratulations to all you boys and girls, all you traders, because this is an outstanding return by any means measurable. So now the question is, so where does Ripple go next? And ultimately, on a weekly time frame, where we are looking at the mark sequential indicator, we are on a +5 of 9 counts. So potentially, we have 4 additional weeks where price can continue to go higher. And so long as price is higher, in the next 4 weeks, so long as we're higher than $2.72, the count will complete. And if I'm looking at what are the next areas of resistance, realistically, it's just all-time highs at $3 and what is this, $3.34. So it wouldn't surprise me if we ultimately retest these highs. But again, I don't necessarily would go there in one shot. I think after having run up 500%, we may just trade in and around here for a couple, for one additional week, consolidate before we ultimately push up higher. But so long as price is higher than, and you have to bear with me, but there is a level here where so long as price is higher than $2.47 over the next week, you're still in a risk reward position to continue to be long, because the only area of resistance, thinking about it, is all-time highs. This week you've already tested the previous area of resistance of 258, or sorry, 275, and you've exceeded that, but you've come down slightly. But it wouldn't surprise me if we ultimately retest all-time highs, and in fact exceeded, because generally speaking, when you're on the approach to all-time highs, you don't just touch it once and then come back down. Generally, you end up blasting past it, and then when you're in blue sky breakout, you'll trade in and around that same support resistance area from a price discovery point of view, and then either figure out whether you'll see whether you move up for continuation to the upside, or you come back down and retest and play around with previous areas of resistance. So, congrats to anyone who was in Ripple 50 cents at the beginning of November, because you went 600%. I generally think your Ripple is bound to re is bound to test all-time highs again, with the potential to blow past it and create a new all-time high. All right, so the last chart I want to do talk about is AKT. So in a previous video, I mentioned that I was long AKT and I was going to be scaling out at 445 and then ultimately at 455. So my sell orders got hit on the 29th. Yeah, the 29th going into December 1st. So again, when I initially entered the position, I saw the opportunity. We were just bouncing in and around this area. I saw that because we held this $3.31 propulsion bearish momentum level, it still favored for me to continue to go long. And when I acted upon that signal, again, I saw there were certain resistance levels that I knew should we approach them, those are the areas that I want to scale out of and ultimately end up flat the trade. So, had you listened and followed my analysis, you would have gotten in at a relatively good price, because where did I get in? I got in at $4.05 on November 27th. So that was in and around this bar right here, bar 13. And there was a level in here on a shorter term time frame. I think it was the 4-hour. Give me a second. Yeah, so this was the level that I was looking at. And I said, okay, so long as we hold this level, which we did, I want to continue to be long for a play up to this 441 level, and then ultimately to this 450 450 level. And then, like I said, on the morning of December 1st, my sell order got hit, and I ultimately scaled out of both positions, 50% at the 445, and then the 50% balance at 455. So, for me, that was a good gain. That was a solid gain. Directionally, I was correct based on several indicators, as well as looking at Ichimoku clouds. For those of you who are just joining the channel for the first time, I generally like to use Ichimoku clouds because it's a Far East Asian technical analysis indicator that pretty much half of the non-Western world uses and is trained on a technical basis to use when they're trading. So it pays for you to understand how price moves in relation to these 5 lines, 2 of them being shorter term moving averages, and then these this green and this red cloud area represent future projected price. And so I like the fact that it's both forward looking as well as backward looking, and depending on how price trades relative to where these lines are will give me an indication as to whether I want to be looking bullish or bearish the market. And then coupled with that, I use sequential and propulsion developed by Tom DeMark, and obviously through Symbolic, that you only have access to if you pay for on a subscription basis, and it's not cheap. So this platform is both a teaching mechanism as well as a demonstration for the viewers to allow you to see what I'm looking at, and also for you to follow along in terms of the my overall journey in trading. I've been a technical analysis trader for over 5 years, uh, trading in both stocks and crypto, and I've had very good success. That I figure, hey, if 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 the big institutions and hedge funds are using these models exclusively, and yes, they may be using proprietary indicators as well to supplement, or yeah, to supplement and provide confluence of signals. But I'll tell you one thing: the DeMark indicator has been taught and provided to so many of the largest Wall Street institutions that they're using it exclusively and paying attention to it. And when certain things show up in the charts, they're paying attention, and they're the ones that are positioning themselves for the overall next move higher or lower in the market. So, it pays to pay attention to this, to understand this, to get to know this, because the success rate of this compared to some of the other indicators that you may have learned in technical analysis textbooks, um, they are one lagging indicators which show up several weeks to maybe no indicator at all as to the overall direction of the market. Meanwhile, um, the utility of the DeMark indicators um, have so much more um, utility in being able to project and show you overall trends in the market well before some of the other tools that you're using. So that's it for today. I thought I'd give you a flavor of what December may bring. Generally speaking, I'm overall bullish the crypto market, but I'm picking and choosing where I want to enter into new longs in Bitcoin. Um, my preference is to start building a position in Ethereum for the potential outperformance of it relative to Bitcoin. Congratulations to anybody that was in XRP. I think you're more likely than not going to test all time highs, and you got to see another trade of mine that was successful. The last thing I'm going to say is trading is not easy. Anybody that shows you that they have 100% win rate, that's complete garbage. Nobody is that good. There are other factors within the market, that you'll never get everything correct, but the combination of these two indicators plus your more traditional MACD and some of the other indicators as well, the marriage of all of these three indicators or four, you know, thinking about where you're placing your trades is also important. So that's it for me. If you like this video, subscribe, hit the like button, share your comments, let me know what you like, what you didn't like. If there's any other crypto coins that you want me to take a look at on the next episode, let me know. I do respond to your messages, and thanks a lot, and signing off for now. Millennial Trader out.